Hello, this is Randy Opper doing an update for the course. It's been a while, and after working with so many students, I now have enough feedback that I can put a little topper onto the course so that people can make sure they're using the information correctly. So we'll start out with a few reminders. First thing is you signed an NDA, a non-disclosure agreement. Dan hired an international law firm that deals with countries all over the world. It's called Jones Day. And this was to protect the information, knowing that it was powerful and knowing that I was handing this out to people, that they had to follow the policy. And that non disclosure agreement covers even the chart pattern Chapman. So it's important to understand you're learning some very powerful strategies. There's always that one person that watches the video out of 100 that will say, oh, I knew all of this. And they'll be very cocky about it. But they don't know this. If they really understood it, they'd go crazy. But they understand some theories, but they're not seeing the actual edges. When you put down your ego and you just study what I'm showing you, these edges are so powerful, the course pays for itself in a day after you take it. I mean, I have people constantly tell me that in the first week they took the course, it paid for itself. And that's not just when the market is perfect. It's you have to apply the tools and understand them correctly. The smarter the person is, the more they will run past the information saying, I know this in trading, I know this. You're not seeing the absolute edge of it. You're not seeing how simplistic and simple some things can be. And so what I can tell you is remember that NDA. Look, if I want to look really brilliant, I could walk into the main chat room any morning on the day of a perfect gap and start talking that name up and tell you it's going to move all day long. Because I know that persistence that comes when the algos and when the funds out there place that stock on a perfect gap. It's not an accident. But I don't go in and do that because if I do that, people will figure out my edge. So I keep it quiet. I don't even talk about certain names on the day they gap perfectly at all in the main chat room. That's just the way it goes. We protect our edge. There's other things we can talk about. But you haven't learned this fully until you humble yourself a little bit and really apply what I'm showing you. The other thing to remind you is some of you who send me charts sometimes are saying you trying to learn layers. And what I realize is you have a psychological problem. When you draw a layer, it's either there or it's not. It's either on the chart technicals or it's not. If you look at a spot in the chart and you really want to buy it, yes, you can cut through price and draw a trend line that will show up in that spot. You can cut through channels and find a way to get there. You can pick a pivot or a swing point for a fib that isn't even a real swing point and make a fib show up at that spot. You can put the 618 anywhere you want to. You are only tricking yourself. The idea and concept of a collision is you found multiple disciplines of price action that collide in a limited area that provide you a low risk area to enter on a proper trigger, not on a V reversal alone, but a real trigger, so that you can enter in a small area and have the reward potential of 5 multiples just to begin with. 5 to 1 is just the start. And so this allows you to be wrong. This allows you to have a streak that is weak, where your accuracy is down and you still profit. But some people will still find a way to push a level to where they want to buy it. If you draw properly, it's either there or it's not. So I'm going to show you some examples. Now let's go over. So this is DXEM. On the day this stock gapped the TRL into all new highs, it's into fresh highs. There's nobody there. It's blue skies. The computers and or funds that wanted it placed at that exact location where the opening dot was literally right above the line, fractions away, was not an accident. And I'm not sitting and doing some time ORB. I'm watching price on that line within small fractions of that line react, and I'm buying that, and you can see that was a $3 risk and it reached 5-1 in a single day. And you still have runners at this point. That gap is no accident. Here's Netflix. This is not a Netflix breakout day. I know there'll always be that person who's the negative person who will say, oh, it's just a breakout over the 20. It's not. There's two pivots, one and clearly a rejection pivot here. Price gaps right over the line, pulls back and crosses the open. That's all I need to know to open that stock. That's all I need. I don't need time. I don't need a 30-minute or I need to see that reaction on the line, small ORB, bam, I'm hitting that stock. That's it. In 2 days, it's 5-1. You have runners to this day. It's still working. It's not special that it's still working. You buy properly, you get your R. Heck, you could sell 90% at 5-1 and never have to worry about holding runners. But I hold runners because they expand the R to much higher levels, because many of these perfect gaps are the ignition of a large trending move. Here's SDC. We're in 2020. We just started a new year. People are talking about this stock 30% higher than I bought it and 40% higher than I'm buying it, than I bought it, as if it was a perfect buy now. But the perfect buy was the absolute pivot gap down here. It gapped a double top 2T, literally within pennies. It pulled back. This was 30 cents risk, and the stock has moved over $5. So all I can say is you're looking at the ability to enter with such fractional risk if you follow the course. The course isn't worth what you paid for it. It's laughable. But I didn't want to gear this toward institutional money. I hope I'm getting this in the hands of some retail folks just like myself, and you see these edges and trade them with me. That's what we do in the private feed. So you understand the reason why I even have a secondary chat or anything is because we openly are not sitting and babbling about what is gapping up in the morning because we're excited about them. We are literally scanning and creating mini charts of 40 stocks that are all gapping in the right area, trying to see which one's going to open perfectly so we can buy them. We are looking for those special edges, the right shoulder failures. You're in 2020. The only reason the IWM is still going right now is it's trying to take the head on the head and shoulders to new highs. It's one of the major edges I talk about. It's why I'm long it and called it. But they don't know that I'm looking for the head taken. The screw bars that I look for, the bottom bull flags. I mean, I look for very specific setups that I teach in the course. If you're applying these, you'll have these edges that are very powerful. And so when put in the right hands, when somebody is really willing to study and understand this information, it's so valuable. And there are things that I didn't even show in the course that I show in the private feed that are far beyond what I've taught here. But let's keep going. Okay, let's discuss this whole trade from this entire move. First of all, there's your perfect gap. Look at the risk. The dot right over the downtrend line and the pivot high right here. That's the start of the move. You then hit here and then you hit a TRL. The moment it got the TRL, I'm waiting. Can I buy this at a bottom of a bull flag? I draw my downtrend line. I duplicate it to the lower edge. There's your bottom of bull flag. There's your virgin mid right here. There's an FGF, a full gap fill area right below there. That's sitting below there that are levels. Okay, there's a fib that's in there. And so you now enter this stock. I told everyone in the main chat room I bought it at $30. I'm not telling them the truth that it was lower. I'm not trying to give away my entries so that people understand how I do what I do. But the fact is we got even lower. And then the stock ripped up and pulled back. When it was pulling back, I drew my TRL and duplicated, and it gave us the channel that told us we were fine even on the secondary offering. It was holding. Perfect. So you still hold runners. Now we're up here and we're hitting multiple TRLs. We have the yellow that became the big TRL hit here, and we have a secondary TRL right above it. Can it flip a TRL? It's a pretty steep one, but they do it. And my point is, once you learn to use these tools, these collisions, like this collision right in here, where we had the bottom of the bull flag with multiple layers, they will stand out once you do the homework. Next one is WW. Pretty simple. You want to understand why price stops at a certain point. At this point, there wasn't even an uptrend line, but price gaps down, and it happens to be into an FGF, which is the full gap fill on that yellow arrow there, which is also a virgin mid, and a 50% retracement, which is why price stops dead, gaps down, hits the line, and that starts to lift up. That lift up also helps create the channel. And you see here you have a descending trend line. The same bottom of bull flag concept that I just showed ended up being the bottom of the channel. Now you have two channels hitting and a fib. Okay, they're all nailing that same area at the same time. And so now you have that collision of ideas all in that one area. You go to a shorter time frame. I use 30 minutes. And you use a trigger, one of my triggers from the course videos, and you catch your bottom in there. You can see these are abnormally large moves in relationship to the risk. And that's not just because we're in a good market right now. That's your whole concept, is looking for a very small risk for a large reward. Now, just so you understand some of the lessons of what we have learned. First of all, I called the low in December of 2018 that started this whole rally. This was the largest portion of 2019's gains. This is a special signal I teach in the private feed. So these right here, 1 and 2, the largest rallies of all of 2019 came from a very special signal I teach. But it is not in the course. It is something you have to study further on in the advanced chat and the rest. This one was simple. This is an ABC measured move. 1 leg, 2 legs, 3 legs, and it came down and hit here for an ABC. Pretty simple on that one. So that wasn't a hard one to understand, and that's how I was 6 ticks off the low on this low that I live called in the chat. One thing that is hard sometimes, where I struggle and people struggle, is chop. This was the hardest month of the year, was August of last year, 2019. It was definitely choppy, a lot of stop outs, but remember, you can afford to be wrong 82% of the time trading 5 to 1, and you will still be break even at that point. So the R formula saved me in that case. There's your special signal right here, and that has kicked off an enormous rally. And actually, this white line, which was the razor wire edge area that we dealt with for a good chunk of the last half of 2019, was actually flipped here. So once this long signal said we were going to go and get aggressive longs, this has been along this entire time, and this flip right here of the TRL told you we could even go parabolic. So again, apply the tools from this course, and it can be life-changing. This is incredibly powerful, put in the right hands. If you have any questions, you can email me at randy@chartpattern.com, and I wish you good trading.